Hello, everybody, and welcome to the Plus3 Futures and Commodities show. We are recording Friday, June 9th, right before the market closes. My name is Ben Maldonado. As always, I'm here with my partner, Barrie Hederachi. Barrie, how we doing?
Doing pretty well, doing pretty well.
Another week in the books. And on today's show, we're going to cover Big Five, as we always do with Barrie, which is ES, bonds, crude oil, gold, copper, and the dollar and the euro. And commodity wise this week, I'm going to cover the grains, wheat, corn, soybeans, and coffee, in addition to NQs when we come back. As always, let's start first with Bitcoin. And this sort of slow drift lower continues. Very, very low volatility, but it is drifting. It's kind of like meandering lower. As you can see, Barrie, we're basically stuck in this quarter of the square from here to here,
Right.
For the last, month and a half, 2 months almost.
Mm-hmm.
We haven't tested the full square upper limit. We haven't tested the half square. We're really just sitting. I was looking at this the other day. We're really just sitting on this support here right now,
Right.
from that high in February.
Mm-hmm.
So while not super exciting, it's not super bullish, it's not super bearish. It really needs to show its hand before we have an edge in saying, one thing's more likely to happen than another. Anything else you have to add on this? There's not a lot to say.
Well, I think what looks like an obvious area would be like that 25,400 level.
Mm-hmm.
And we tapped it this week. So let's see what happens. If it can hold it, maybe it can just grind it a little higher. But, the whole thing is kind of a consolidation. But all in all, on the negative side, because we couldn't hold that upper square.
Right.
And of course, below we have that trend line that we might touch. And of course, we have another full square under us. And
Yeah.
Not much to do here. Not much to trade for now till we choose a side. But all in all, it's heavy. It's a little bit weighing towards the downside at this point.
Yeah, I mean, look at what it did here, right, for 3-4 months.
Mm-hmm.
Look at what it did here for 3-4 months.
Right. But here what happened is we made a new low this week.
Yes, we did.
So that's something to remember.
That's what I say. It's drifting, but it's drifting lower. So just let it drift and let it give us a decent setup. It's just not there right now.
Mm-hmm.
I know we got a lot to cover, so let me throw it over to you because we need to get into these markets and see where we are, and most importantly, where are we possibly going? Rattling that line, but we're on the north side. I mean, you can't say it's negative.
No. I mean, like the joke I have is, every time a market gets into a high resistance, hitting resistance somewhere, it's always bullish hitting it.
That's true. That is true.
So when you're going into a corner, potential corner is always bullish.
It's always the most bullish at the top.
Mm-hmm. So this is looking very bullish, and as it should, because we're going right up into this 180 day cycle.
Mm-hmm.
And it's looking like it has some traction because we have 90 to 90 high to high.
Yep.
We have 90 to 90. We have 90 low to high, high to high, and then low to high from here.
Mm-hmm.
So I'm paying attention to it, and probably wouldn't hurt you guys to do the same.
Have that. Remember, we have that rebel yell cycle too on Sunday, the 11th. So throw that into the mix. Well,
I'll tell you, this combined with that could really give us some results. So let's see how it plays out. We drew out this box last week. We said 325 is the beginning of the sort of the resistance up in the the spillover into the next square.
Mm-hmm.
And that 4370 was like the upper boundary of it. But ideally, if we can hold below 4325 and kind of mess around and roll over, that's enough air up in there where it would reach a little bit more. You know how the market always goes a little more than you expect. Mm-hmm. And S&P is very good at that. So I'm thinking so far that could be what it is, and we might take a breather from this and maybe correct down towards the lower trend line.
Also, Barry, one of the things you always talk about, and it's really helpful, if you're working with these squares, giving it that eighth of a square leeway, right?
Mm-hmm.
And it looks like your marker there is right near the eighth,
Mm-hmm.
you know?
Yeah. Well, I can turn them on. It's in that, it's not exactly an eighth, but it's, we
In
figured
that
it out through,
neighborhood.
yeah, and we figured it out through square, so it's a little different. So the eighth is right at, right above this 4370.
Mm-hmm.
And technically we do have room up into that because of the timing. I don't think we need to go fly that far out.
Right.
Anyway, even today's bar, and it didn't make any air above the 90, where we have still part of the body below the 90,
Mm-hmm.
which is really 40 to 98. So I would say, from if you purely technical point, we are moving perfectly into this cycle, right into the 180 line here, and which would register on Monday. And going into that, long as we're kind of below this zone here, I think there's a potential for this thing to weaken, and a good potential for this to be a high.
Mm-hmm.
Dare I say that?
And how significant, who knows, but some sort of high.
Well, it could be significant. I mean, it's
Could be.
hard to call them. Like when we were up here, we called that a high, but who knew, right?
Right.
It's going to be this big. So and here's another high, and we had a small reaction. So I think it's reasonable to expect a half a square is a reasonable correction. If you run that's your GAN's basic 50% correction, especially
Mm-hmm.
if you run the square. And looking at these squares, you don't get these points every day. I mean, every week we're not saying, well, we have a time cycle.
No.
It's really here. We had one here, 90.
Yep.
We have another one here, 90 bars later. So yeah, I think, it's a half a year. I think it's probably a good place to pay attention to, especially when price and time comes together, which it did in this case. And we're well under the boundary, even the buffer, sort of the zone that we set up. So it's really below 43.25. And you saw the selling, really came in intraday after we tapped it. So it depends, I don't think it really matters where it closes today. We need to give it a few days next week to see if we're going to sort of drift lower from here, or we're going to hold this and start pushing, grinding above 43.25.
Mm-hmm.
So once you get past the key, let's say the 180, and starts to grind higher, and we can see, we're making higher highs and higher lows, and you can see the internals are supporting it. Well, then we've probably got a long way to go. I mean, we can even call it to have it go up to 46.5, which is the next 50% square. And that is if we settle above the 90. Yeah.
Mm-hmm.
So that's what I have to add for the daily. So for now, not much different. You can see most of the week we sat right at the 90-degree level. We bumped it up 3-4 days in a row. And today we pushed it a little bit higher and started moving lower. So you can see the 90 is actually fairly strong. You can see how it held the price most of the week. And then, we peaked up. Friday seems to be the day we always try to meet the price.
Mm-hmm.
And we did that. Didn't disappoint us today. And we'll see how it closes, but we have to just the basic theme here for next week is, yeah, we're starting to push higher, and that's fine. We just want to make sure the cycle is not kicking in, because there's a high probability that we do that. And if that's the case, we want to make sure that we're not caught on the wrong foot. So just be cautious about that till we settle above this 4,300. Let's take a look at the weekly. So weekly, I mean, looks amazing.
Mm-hmm.
We messed around all through the line here, which is 216 degrees from the low. And we're starting to push higher. We have a big weekly channel here. We got plenty of room to move around. So this is looking fairly good at this point. We have a weekly high up here that we might come up and test. And, I'm not even going to talk about a double top, but there's definitely a potential a false break that could happen in this area. So we got to keep an eye out for that.
Mm-hmm.
The high on that August 22nd high was 43.27. So we came very close to it.
No, 25.50 is the high today.
Yeah, 25, yeah, 75. So we're right there. And so the move is to the upside. Doesn't mean we can't correct back to this line and check it. Matter of fact, that would be like the healthy thing to do.
Super healthy, yeah.
Super healthy, and we're kind of in a cycle where that could happen. And yeah, for now, as long as the weekly's making higher highs and higher lows, no one's going to complain. The only thing is when we run into a price and time point, we have to be a little bit cautious. So it's a little bit of yellow light, and we want this price to kind of set up above or below this line to figure out the rest. And this week, we didn't give us much since it hugged the line the entire week. So we'll just leave it at that.
Mm-hmm.
And I just want to give the 30-minute a little bit of time because that gives another perspective, I think, even though it looked like really messy on the daily chart. If you go back to the 30 minutes, you can see we started posting this on Monday. If you go back, you can see how, that daily 90 turns out to be just happens to be the 180 coming off this low in May.
Mm-hmm.
And you can see how prices just pushed against it. And you can see, like we always talk about, the pullback was held at the 50% line. Then we broke, came back one time, pushed up here, broke the channel, came back to test the top of the channel, and then we took off this morning. Of course, we came back right to the 180-degree level, which is, of course, now support because we're on top of it. And looks like it's a Gartley.
Yeah.
So if you do an ABC, you could easily go back and tap it here, and that could finish this up. So always got to be open to that. For now, we took off, hit the resistance, came back to support. So we're kind of in the middle, and we're posting these every day. There's an update on the on Twitter, so you guys can follow it there. Anything else you want to add to this, or we're good?
Just I got monthly resistance with a half square at 43.61. So that's in that box area of yours, right in there. If we really stretch out and do ABCs, we could get, 44.12 to 44.60, 44.70.
Okay. It's
in
about
that area.
Quarter of the square. Yeah.
Right.
Yeah.
So we'll
So for
see.
next week, we're kind of cautious. We're watching this 43.25 area to see if we can really hold above 42.98.
Exactly.
Let's move on to bonds. We found resistance up here. We had the downtrend. We were looking for a counter trend. We got that. We sold off, and it's kind of holding this line, but not much. I would say as long as we're below this 130 line, which is a key level, I'm expecting bonds to be weaker rather than stronger. But like I always say, you saw what happened in this box. So it's possible that we find a new level to consolidate within this blocks, which between the 270 and the 50% square. So that's between like 123 and 129, let's say 130. It's possible we do that. But for now, not much. Trend is down. We've had a couple of counter trends, and this line could be providing some support. So you have to be on top of that. Anything you want to add, Ben?
Just that it's been this week we were in very choppy market in the bonds, and just let it play out, see if we can get a good setup.
Yeah. And if you put the 90 down at the low, we can see that line, right at 130. It just happens to be the 50%, right?
Yeah, that's good. Good
dash line there. Which means coming off the low, we hung out above the 50% line, then we broke below it. So this is critical now to watch to see if we can get above the old pivot high, which is resistance. So we'll leave this here for now and see how it plays out. That 50% is going to be important. And definitely. 72 is also a key level for the bonds. And we can quickly take a look. So if you put it there, we almost got to the high, but I don't think 72 is playing out at this point. So let's go back to the 90.
Yeah, the 90 looks good.
Yeah, 90 looks good. And the you can see it's doing perfectly between the thirds. So,
Mhm.
so it seems like that's the right zone for it. Looking at the weekly bonds, well, it came down to our trend line from last week.
Perfectly. Look at that. The lows all
Mhm.
3 days. Boom, boom,
Yep.
boom. All 3 weeks, I should say.
Yeah, all three bars, and the upper line is still critical. It's right at that 129, 130 level. We'll see how we push against it. So it's either, I mean, now we're going to get squeezed into this line, you know. So it's either, you know, we're going to have to break out and do something, or we're just going to slide down.
Mhm.
One of the others. So we'll watch it. But as we compress into this, bonds might get, you know, even choppier, even more compressed trading. So be aware of that.
Right. Let it do its thing.
Let's move on to crude.
Also a chop fest.
Yeah, not really a lot to say other than, you know, what's really important is, you know, what happened here, you know, 73.50. You can see what happened Wednesday, Thursday, right? We held it. We're under that trend line. We basically broke under it, came back and tapped around along there, 23.50 plus the trend line, and we sold off a little bit. But I don't think it's a done deal, and no need to spin our wheels in here too much. I mean, when the market's trending, it's very easy to see. We're just trying to point, you know, when it could begin, when it could start trending.
Mhm.
So here for now, not much other than we are making higher lows, and we'll see if the trend line holds this time. If not, like I said, we could be, you know, basically trading in this box till some other force comes into the market. Overall, it's bullish because we're holding above this 43.75, and the lows that came in, cycle lows, are still holding. And
Yes,
this
they
is
are.
where, you know, this is really typically where, you know, the lows come in, but everybody forgets about it after a month because nothing happened. But you know, the lows are in place. So all of a sudden, if something happens and the pattern shows up and we take off, it would be very easy to miss this. So I would really watch this as if it has a lot of potential to the upside, because these lows are still in place, even though it's not doing anything now. We'll be, that's why we watch it every week, watch it every day. And if it kicks into gear, then we have the confidence to know that a lot of cycles expired here, and what's starting would have some legs. Does that make sense?
100%. Yep.
Looking at the weekly, well, that sums it up pretty much. We've had
Right.
5 weeks of inside action after that one dramatic week of
The
volatility.
lows.
Yeah, and the lows. So really, this is not giving any clues, which is also a clue, you know. So if it's not pushing up upwards or downwards, that means it found a happy price, happy medium here. And you can see we've, you know, this area is not new to the market. We've spent plenty of time in this level band, and we do have some overhead. So if we somehow push through this and get above that 73.50 and settle above, I think there's plenty of upside to be had and some good trading. So let's just keep that in mind.
Just got to be patient.
Got to be patient.
It's just like cotton right now, continuing sideways.
Man, all the commodities, that's the game. You know, you just wait,
Right.
then you trade a little bit, then you wait.
Yeah,
You trade a little
that's
bit.
it. That's it.
Especially if you're doing options. If you're doing positions, fine, right? You still
Mhm.
got to wait. A lot of waiting to do. And speaking of waiting to do, here's gold. You can see the 1940 held. We talked about it last week. And really, the box that we drew in, which is, you know, 215 or so to the upside, and the square level is 1980. And, you know, the block, I'm treating this as resistance for now till we kind of get above it. So this is consolidation in a grand scale. We're above 1940. We're below 1980.
2000. Yeah.
Yeah, 2000 area. So it's just kind of consolidating. Not much, nothing actionable at this point.
Correct.
Now the weekly, you know, the trend line is just barely holding. It's held this
It's
week.
still holding though. Look at that.
Yeah,
3 weeks in a row.
and it just pushed up. So we'll see how it works out, you know, next week. That 2000 basis, the weekly chart is still there. So
Huge.
again, kind of like the bonds, it's compressing into this. And when it compresses, either we're going to go up, you know, potentially a false start, or we're going to slip out of it and go check this 1920 area down below.
Mhm.
Let's move on to copper. Copper did pretty well. Finally got up to our target.
And I think that low is a good low, Barry. That was a good low.
Yeah, low is good. I mean, 354 we've had there for a while, and it worked out perfectly. Came in 225, high to low to low came in, and high to low was 90. So yeah, I think it's good. Only thing is we expected it to go up and test the 50% line, which it did. Now, if we can somehow correct and then push and get on top of it, I think we could be on the way. If we don't, we could be consolidating in this box for a little bit longer.
Sure.
So we'll see how that pans out. Next, we have copper weekly. I wouldn't mind the rally up to 4. It would make sense. It wouldn't be out of the question. So it's possible that we somehow get over the 50% of the daily square and go up a little bit higher. But anyway, we had 3 weeks up off the low. It's possible that we consolidate next week in some way, but we'll keep an eye out. Moving on to the dollar. Came right to our trend line. And this is positive. And not only did it come up, it also was held there. Buyers came in, shorted up a little bit. So overall, as long as we're above, the 50% of the square, like we've been talking about, 101 area, we're good. Let it do whatever it wants to do because the drift is to the upside. So, trade accordingly. If you look at the weekly dollar, here we are. Again, we had a number of weeks up, so it's normal to have a kind of a consolidation. So we have one bar counter trend so far, looking at it as if it's moving higher. If we can stop at a 1 and move higher, dollar would be very strong. But it's possible we get maybe 2 bars. Let's watch, see what the correction is, because this impulse is going to require some kind of a correction. So we'll see how that comes in. And if you go back and study the dollar chart, you'll see, the corrections come in all different flavors. So we'll have to see how this shows up. But it is above the trend line. It's above the square. It's in positive territory.
Barry, look at your December low, and it's kind of a similar pattern.
This one?
No, December 2020. Look at that. Look at that pattern, man. It's very similar.
You mean trying to move out of there?
Yeah.
So we could be like right here now.
Something like that, yeah.
Yeah, but look at that, right? How many people?
What a mess that was.
I mean, this was potentially a false break. Came down, and then and the only reason we were on this was because we saw this low come in, and we knew that down leg was over. So, and then we were looking for this leg to bear afterwards. So that worked out.
And I'm not saying it's going to do the same thing, but it just visually I can recognize that pattern. It's very similar.
Yeah. Yep. For sure. And that could be repeating.
Yeah, possible.
We do have these fractal kind of patterns that show up.
Sure.
And this is, the low came in. So we're just patiently waiting for things to
set up.
Yeah, set up and mapping it out till then. Euro, pretty much the same story. Long as it's above this 108 level, it's definitely in a very weak position, let's say. And below the square, it's still soft, and looks like the 144 came in. So let it do whatever shenanigans it wants to do, but we're looking at trading it to the short side.
Yeah, it's looking weak.
And let's go to the weekly euro. Pretty much. And last week we talked about how we had 5-6 weeks down, and now it's time that we have some kind of a counter trend. And looks like we got 1 bar on the weekly. That 108 level is up here where the green line is, in that area. So even up to there, maybe even penetrate that a little bit is fair game. What's more important is the 110 area up here. That's
solid. A good line. Good line.
It was good resistance. We saw it coming. You guys can go back and check the videos. So now we're looking for it to. And, if that's the start, we get a second, that third could be a doozy, so we got to watch all this carefully.
Yeah.
And that's what happened going up, right? We had a 1, 1, 2, here's a 3, 4, and a 5. So finished it up. So it's totally
It's
logical
setting
to
up.
think.
Yeah.
Yeah, it could be, and also it could be a ABCD down correction,
Mm-hmm.
or it could be 5. We'll see how it plays out. But for now, the idea is that we're looking at the downside. We're allowing it to come through the finish up the counter trend and take the short side.
Sure.
And what else do I have? I didn't have much today, right? Because not much happened in a lot of the markets. That's why.
No, ES was the only thing that was really, really active this week.
So yeah, I think yes, that's the story. I mean, everybody can be bullish as much as they want, but remember this 43.25 area is the key, one of the key levels to watch, and 43.70 would be the upper end of that. I just want to make sure that we have a good handle on if the cycle expired or not. And 180 for the S&P is pretty good, given that we're not in that good old easy money bear bull market.
Right.
So this is a pretty good stretch. Yeah, it wasn't pretty, but hey, at least we got there on time.
Yeah, that's true. Price and time right there.
Right, price and time. So, and here we went 7/8. Again, price and time worked out for that. And we here. So I think after next week, we'll have another 5 bars. It'll give us a much better idea of where we're going to run from there. Now, one thing, since I can just do a couple of minutes, if it's possible that it's this low, I'm really keying off this low because a lot of things lined up. But it's possible that we're going off the false break low. And if we do that, you can see we've already taken out the 90, right? And so this is it's in the back of my mind. I'm not ignoring it. But you always want to watch a couple of squares, couple of points, especially when it shows up like this, which is guaranteed to confuse everyone as to which one is the real low, right?
Where does that give you the 180? Like late June? What's the date?
Well, this one would give us, late. I mean, the thing is, what's funny is that date, the 20.
Oh, the solstice right there.
Yeah, 21st, 22nd,
which is
also has some other cycles coming in. So, hey, it could be that. So that's why I'm a little bit cautious. There are times to be cautious, time to be not so much. Now coming from 41.50 trading to the upside wasn't that big of a deal. We knew it was going to push long as the levels were taken out intraday and on the shorter time frame. Now that we're here, I'm fairly certain. Like if you go to this low, you can almost make a case. We did the 45 here. We're off by 2 bars. We can almost make a case. We did a 90 to the high. I mean, it wasn't the high, but it was close, right? And so it's we don't want to fudge the numbers and fool yourself, but you also want to be open to where the cycle might be going.
Possibilities, yeah.
Yeah. So this is I would say a kind of a possibility, but a little bit remote. This I feel like has the correct traction. So we'll watch this. And these times, the 9th, 11th, I had some other cycles coming into this, and there's a lot of stocks that are firing off right about this time, right in this time period. And a lot of them have blow off moves. So that part tells me, hey, there's a high probability that we are putting in some kind of a high in this window. So we'll see. And some of these stocks didn't have a double bottom, if its correct bottom was this one. So that's the other part. Well, that's all I got.
Excellent.
Put it back to you.
Good review, Barry.
Thanks, Ben.
Climbing. Yeah, last week we left where we'd pushed above the square and we said we got to watch and see what happens on a pullback. Well, those 2 days told you. We had basically a 2-day pullback and then we reversed today.
Right.
So while we are extended and we are in an area where we could top timing wise, we got to watch price, and price has to get below this full square here. All the levels, by the way, are in a Google Doc spreadsheet, which we'll post when we tweet the link out for the show. But this, you're talking for the NQs, 14,340 is the key. As long as we're on top of that, the bulls have the upper hand.
Right. And a decent trend. I mean, pretty sharp.
Yeah, I mean, look at the acceleration. That means momentum's kicking in, right?
Mhm.
I wanted to show the weekly and the monthly just to give you some perspective there too. Look at the weekly. I'd say the lows of the last 2 weeks are pretty important
Yeah. Yeah.
because that's the full square there.
See what happened after we left the half square below, right? Just
Yep,
straight up.
tested it,
Mhm.
tested it there, and boom, straight up to the full square. And so now we're in that decision point, but we know as long as we're above the full square here is similar 14,335,
Right.
right in that area. It's critical. Here's the monthly. The reason I'm going to show you the monthly is
Uh-huh.
not because we're nowhere near support, but it's it's the same thing, right? We came up to the full square, straddled it for a month, and then last month the lows were at the bottom of still on top of the full square. Now I think the key here is we want to look at resistance, potential resistance coming up, which is around 14,870. That would be half square resistance on the monthly. So we know the levels, we know what to watch until support starts failing and resistance starts holding, it's still bullish.
Yep.
Anything else you want to add here on the NQs?
Well, I would say if we hold the lows from yesterday, um, then my next resistance would be basically like 1,500, 1,520, 15,000, 1,520.
Right, which is up in here.
Yeah, a little lower.
Little over the half square.
Yeah, right there.
Mm-hmm.
So, and that doesn't seem impossible. So we'll see what
Nope.
happens. Mhm.
Yeah, we'll see. We'll see how it goes. What we got to watch levels. That's key. So now on the commodities. Today we're going to review coffee and the grains.
Mhm.
Everything else is either correcting like sugar, or it's sort of stuck in sort of a sideways consolidation like crude, nat gas, or cotton. So does that mean we're not focusing on those three? No, you got to watch them like a hawk because they're all three also set up for potential very strong bullish moves. That's crude, that's nat gas, and that's cotton. Cocoa has been the star, man. That thing continues to grind higher and continues making highs. I want to watch that for some pullbacks on like a weekly or monthly basis because it's making a really long-term breakout, which is powerful. Copper, you talked about. Gold, you talked about. Silver is trying to correct and put in some sort of correction there that we can get involved again. So there's nothing to do there.
Mhm.
So let's go into let's start with the grains because I think all of those are signaling something interesting that's happening. The one that's furthest along is corn. We got the bottom here. Now remember last week we showed on the weekly monthlies how corn and soybeans were putting in lows on on full squares or half squares on those higher time frames. So we're
Mhm.
confident in this low. We've had a nice push up, and here, which is not unusual, we're at a full square and we're kind of battling, right? You see
Right.
all week we've been battling around that full square. So we let that play out. We want to see whether, okay, if we fail here, can we get a higher low?
Mhm.
Or if we get up and we sit on top of it, that's the launch pad for moving up, to the next half square. But corn, this could frustrate some people this week, but it's really not unusual to see that kind of behavior. Barrie showed it in ES. He showed it in a bunch of the markets he reviewed. What happens when we get to these full squares is there's a battle between the bulls and the bears about which way we're going to go. We're going to sit on top and keep going, or are we going to get stuck under and have to correct and see where
Mhm.
the next low is going to come in.
Right.
So corn's doing what it needs to do. We just want to see how this battle resolves because that's going to help us determine the strategy of either staying long or adding to your longs or waiting for a pullback to happen. Anything else to add on corn here, Barrie?
Well, I would say if corn can take out the highs this week, we could be in for a little bit of a run.
Mm-hmm.
you know, at least to get started and maybe even to next week, potentially test 650, 670.
Sure.
That might be a trend line, actually. Is that where that is?
Up in here. Yep. 654,
Yeah, so up in there.
660. Mm-hmm.
But we have to clear the highs. So if we do that, I think we're in good shape.
Yeah. And it's building up steam for something.
Mhm.
This back and forth chop all week is just setting up for the next move. So we gotta wait and be patient and see what happens.
Right.
Let's check out beans is sort of in the next phase of movement. Actually, look at it where we closed today, right on the highs.
Very strong.
Nice. Yeah. Closed on the highs of the week too. So the low came in. We called out this false break a couple weeks ago, and then it's doing just what corn did, right? Let's go back to the corn chart. Just what corn did when it came out of the hole, right? Boom, 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 boom. 4 or 5 days up. Let's go back to beans. 1, 2, 3, 4 days, 5 days up, right? So, and we're most likely going to run into the resistance here at this full square, right? So we want to watch coming into this full square. Do we blow right through it, sit on top of it and keep going, or do we pause and get a pullback? Either way, a higher low pullback is bullish. If we go through this and sit on top, that's bullish. So, I mean, beans looks very good. Would not be surprised, given the structural resistance and the full square up here, to see it slow down or, chop around here or even pull back. But this is a market that is signaling that we got the false break low. That is a good low. It looks good. Now we just got to pick up and see what's the pattern going to be coming out of here, right? Coming out of this move. What are you seeing when you look here at beans, Barrie?
Beans, well, if we can have another day like today, we could be off to the races.
We could.
And because I'm looking at that upper line, the full square, we still need to get above that.
Mm-hmm.
So I think if we can clear that, sure, I think beans could be on. Otherwise, this could be, it's almost the size of that, that correction we had in March going into April, that counter trend there. So, so we really need to do a little bit bigger than that, better than that.
Yeah.
So if we can close above today's high, this week's high, and establish a level there, then we could probably punch through.
Yeah, and remember on the higher time frames we showed last week that this low came in on full square, so it's a good low. Now we're just trying to decipher the pattern coming out here so we can get involved without a lot of risk.
Right.
Now let's go to wheat, which is the laggard, but showed some nice things this week, and I'll share that with you. So here the low came in last week on this full square. We've pushed up, and now we're just sort of trying to figure out how we coming out of here, right? This squared out. My square here was a 90 by 180 from here. So that was that's a good low. We basically made our high in October, and late May, early June low. It's roughly 180 trading days. So that gives us our 180. From here to here is 90. So we got 90 by 180 there. Sharp move out, just a little shy of the half square we came up, and then we pulled back for the last couple of days. The reason why I want to show you this is while it's early, let's look at the weeklies and the monthlies here, just like we did last week with corn and beans, and show you why I think this is a good low. There's your weekly. And if you look, not only is it on the full square, look structurally how this is.
Yeah, exactly.
2018 highs, 2020 highs. In 23, it's a low. That's structural support. And we had a nice reversal. Last week we closed at the high, and this week we made a higher high.
Yeah, good follow through.
Yep. So that's a good sign for the weekly there. Now let's look at the monthly. Price and time on a half square. it pushed a little bit, but this is the timing is what's interesting to me here, right? Right on the half square.
Mhm.
And if we make a higher high this month, that'll be a very, very good sign. So let's go back to the daily. What are we looking for in the daily? Well, we want to see, do we get that higher low and stop this sort of meandering lower lows that we saw all the way down, right? To confirm that this is a good low. Do we get a higher low? We did reverse today. We had a 2-day pullback and we made it closed on the high with a higher high than yesterday. So that's a low. So the next marker is, can we take out the highs from, looks like, what was that, Tuesday, Monday? If we can take out those highs, then we've got a low, a high, a higher low, and a higher high.
Be out of the channel.
Yep. Yeah, we'll be moving. That's right. We'll be out of the channel. We want to sit on top of this half square and then build the pattern like we saw in corn, build the pattern like we saw that's emerging in soybeans. So while wheat is the laggard, this past week or two, it's starting to show signs of a turn. So I think we got to watch wheat. We got to look for the pattern of higher lows and higher highs, and if that gets confirmed, then we have a good spot that this low came in with the 90 by 180. Anything to add on wheat, Barrie?
From my side, well, we need to clear. I have 360 degrees down from the high. 22 March high, right around 640. So I'd like to have it clear that and get on top of it. Yeah,
right there. Yep,
we can get on top of that. I'd feel a lot better about the low.
Yep. So it's essentially the same thing. We got to take out that recent high.
Yep.
We take that out, and then we're in good shape.
Yeah.
So the grains. The thing I like about the grains is, while they don't all move at the same time, they do have a group, sort of a herd movement that goes with them, right? And you can see corn was the leader, soybeans was sort of the first follower, and now wheat is the laggard, but the whole group is starting to get money. And that's the history of these things. They all generally go up together and then they come down together. So the fact that we're getting this confirmation on all three, gives me a little more confidence too, that we could have seen the lows, and these things they're going to start moving in the next 2-3 months. We should see some really nice moves out of this group. Last one, let's go to coffee. This is one we haven't talked about in a little while. We kind of triangulated this bottom that came in, and then we saw this sharp move up. And it's been drifting since April. Last couple months, it's just kind of been drifting lower. We had a nice square here at this low. On a 4-hour basis, we had a 60 by 90. On the daily, I had a 30 by 30 here. So this higher low squared out really nicely from price and time standpoint. And now we're getting this movement out. So the key thing for me now is, can we settle above this half square? Can we take out these highs here, settle above this half square, which is, call it 189.50? If so, this is the structure where we could catch that fast 3 coming. So I really want to watch this market closely, because I think it's set up to give us that kind of fast move. Structurally, right, we pulled back here. The first low we saw off of the ultimate bottom was right here, and it sat on top of sort of this whole mess under here, which was a nice, it's not fast, it's a little sloppy because we came into it, but it's still very good structure. We pushed up. Now we're trying to build another higher low here. So it's the next push that could really give us some speed to the upside. The test, I think, that's going to really tell us something is up here around this 212, because that's weekly and monthly resistance. So I want to see it. That's the first sort of way station. We want to see how it acts there. And then if we can sit on top of that, that's when we could get the fast sort of third wave move here in coffee. I know you love to drink the stuff. How about the commodity? You want to own the commodity here,
And
Barry?
I think your analysis is pretty right on. I think if we can move out of here, there's a good chance we can run,
Yeah,
especially if we can get above 193. Well, let's say 194, wherever you have.
right around there. Yep, that old high, the last swing high here.
Yeah, so if we can get above that, I think this we could really stretch out. So
Yeah, and one of the things I want to show, use this as an example. Remember, we called this low in January, right? And we
mhm,
saw the move coming out. And just now on a daily basis, are we thinking we can catch the third? That's 5 months, people.
right.
So, there's a fear that comes in trading, Barry, and I want you to talk about it because you're good at this psychology stuff with trading. If you say, "Oh, I missed it, I can't get in," right? I didn't buy the low, I can't get in.
Mhm,
Or even if this thing started moving, I can't buy it here. I can't buy this pullback because look, the low was here. When the biggest and fastest move, on the downside, here's this one, but let's pull it over here and you'll see where the fastest moves come. Like, so here's the low on this swing, right? But look where the fast move came. Look where
mhm,
the big move came months later. And again, it was another sort of 5-6 months later where you got those big moves. So it's sometimes it's we talk about, you got to be patient with these things, but you got to watch it because when you get in this kind of pattern,
mhm.
that fast move is coming. We just don't know exactly when, which is why you got to be on top of it. So can you talk about that? Okay, I didn't buy the low, but as a trader, you don't have to buy the low to make money. Can you talk about that sort of
Mhm, mhm.
psychology?
Well, in all of this stuff, you just have to go back to some kind of a systematic way of doing it, meaning systematic way of entry, even if it's a trend line. You know,
Mhm.
if you just draw a trend line down, it breaks the trend line, and if the risk is you can tolerate the risk, then you have to take the trade. Meaning, what I'm trying to say is, speaking of psychology, right?
Mhm.
The psychology really should be sort of framed by your system because that's your relationship. One of them.
Mhm.
Other one is the risk. So I think a lot of these questions that come up, like, oh, I missed out. And if I get in here, now we could go lower. It's not going to go any higher. Then it moves a little bit higher. Of course, you end up chasing the market then. And
Right.
and and I swear I've seen people that systematically buy right before the correction starts. And they
Right.
would systematically sell right before it takes off again.
Right.
And it's amazing, right? And these people are really good at catching sort of that collective, whatever that energy.
Extreme, right?
Yeah, and they're perfectly in line. Unfortunately, it's the opposite is what's required. So I think I would have to always say I don't think anybody could be strong enough to just look at the market and take the trades while watching it real time without any kind of a systematic approach to frame it. So I would say the way to get out of like 50% of 80% of all the questions that come up and these sort of self-created problems
Right.
because after all it's the self, right? It's just you and the market. So if you're having issues with it, it's not the market.
Right.
Market's just there every day. It was there before you were born. It's going to be there after we're gone. So it's not the market. It's you. So whatever issues you're having with it, it's really, market's going to act like a mirror. And what I can say is the only way to sort of get a handle on it is to put your own rules upon it and not let the mind just sort of be able to handle this, market that's kind of meandering through the chart. and and you can see where I gravitate, right? Squares. We got
Mhm.
lines for price. We got lines for, I mean, there are lots of all kinds of systems, but you can see, like, speaking for myself, like I wanted to see something very structured. Let me see how it moves through a grid like this. And then your points, your references, how it's done in the past. So a lot of these things have to be learned and seen if you're gonna trade consistently, and you want to have consistent profits, consistent trades. Otherwise, without a system, I mean, really, the debate really comes down to, do you want to trade with the system or without? And really, that's no debate. You need some kind of a systematic way to get in, to manage it, and to get out. So anything outside of that, it's going to end up like, oh, was that the low? Was that the high? Should I buy here? Should I buy there? And, so I kind of nip it at the bud and to say, listen, systemize the whole thing, test it, back test it, forward test it, get comfortable, know your odds, know your probabilities, understand your risk, and then you're good to go.
Yeah, what I want to make sure everybody understands is what you said, because it's so critically important. By having a system, you eliminate those kind of questions, because your system tells you when to buy, or your system tells you when to sell. It's not, oh, did I miss the low or did I miss the high? You're taking the signals from the system.
Right.
As opposed to from your mind, the mind who wants to, buy the low, sell the high.
Or to try to find solutions on the fly.
Right. Right. But I think that's really important, is that the system eliminates that kind of question anyway, because you're only going to take a signal, whether in this case, let's say it's a buy signal, if your system gives it to you.
Exactly.
You don't have to answer the question of whether it was a high or a low. You just have to answer the question of, is my signal giving me a buy?
Right.
Is my system giving me that buy signal?
And, sort of what I would add to that is, you can do analysis, which is just fine. And you need to do that like we do. We want to know where the highs and lows could potentially come in, because that's that's part of a systematic approach. Once you know where the pivots are, then you know how to measure from those highs or lows. So that helps. So, that can act like the template, the stuff that we share and what we do. But then, independent of that, you need a systematic way to trade those moves from this level to the other level, and that would, like you said, exactly, that'll eliminate probably 80% of the questions that we would have to deal with, which means, we release that much capacity in our head to deal with the real things, which is really assessing risk properly, managing the trade properly, and letting the trade run for full profit. There's a lot of other things to discover and actually use the, your intuitive function or your mind, rather than worrying about, oh my God, is this place to get in? It's amazing how much, not to get on a rant, but it's amazing how much time people spend about getting in and how little about getting out. It's probably 90%, I was going to say 80, but it's probably 90% of the talk is about getting in, right? And I haven't seen hardly anybody having a service, exit signals.
Right. Very good point. Very good point.
So we have to sort of have a balanced approach to this, knowing, hey, entry is just one. Then you have a middle part, which is managing what you
managing the trade. Yep.
Yeah. And then you have the
taking
end.
profit. Yeah. You got to work
the eventual
the exit.
So without having all of those parts threaded together, then I think you get into all these stress states people get into, because, oh my God, should I get out here or there? What if I don't get out? What if it corrects and you're still in? We get all this new set of problems to deal with. I'm telling you, people I've seen, I've known people that can trade like an ice cube, no matter what happens, they keep their nerve and they'll take the position, they take the trades, nothing, every day. And what I've noticed is that they really trust their system. They really understand the probabilities. They really understand the odds. Right. And because of that, they don't care if you get a couple of losses here and there. They understand, because why? Because they can limit the risk. Right. They know exactly how much they're betting on each trade, because they know what the odds are. So once you figure that out for however your approach is, and you dial in your risk, your relationship to risk, man, then that takes out a lot of overhead noise that you have to deal with.
And that's really, really important. So I know you're going to be watching coffee this week, Barrie. What else are you going to be focusing on?
All the grains we got to watch. I think here comes another sort of a potential surge
wave.
Point.
Yeah.
And other than that, the dollar, of course, I'm watching, and S&P, this could be a big one up here. We have 180 bar time count, which with a 90 high to high going in. And we have a lot of stocks that blew off into this. So when I see that, it like the AI stocks, for example. So when I see that, I pay a lot of attention to that market. So right now, S&P just happens to be there. So S&P would be like the main thing to watch, and everything else is sort of secondary.
Right. I think you're absolutely right with this. With these cycle hits coming, the time counts, the 180s, the Rebel Yell cycle, the solstice coming up. We really got to watch price action for clues as to what the effect is going to be on these markets. It does, because it doesn't necessarily have to mean if something puts in a high or a low. It can just be the character could change in how the market trades. A sloppy market could suddenly start trending. A trending market could suddenly get sloppy. You got to watch the price action, going into it, which we've seen. And now we want to watch the price action coming out of it and say, okay, has something changed? Is there any character change in what's going on here?
And just to clear something up about, watching the market here, and another reason for watch these critical points like the 180, like we talked about the 180 and the 90 high to high and all of this, is not to catch the high necessarily, but it's to know if it's a high, just like those lows we've caught in the past. Once you know that low is in place, then you have a much higher confidence in those buy side signals that you generate out of your system, right?
That's right.
And it's the opposite, obviously, for sell signals. So one of the, at least from us, I know for you too, it's really important to nail that low or high, and also to confirm it. And then we know, and the other thing is not just that, but we know, looking at the cycles for that market. I mean, these are all lessons, man. This is like GAN squeezed into 10 minutes. But it's the essence of what it is, it's the essence without having to spend years studying. Other thing we know is, let's say something ends at a 90. Well, we know we have at least a 45-day window in the other direction.
Right. And Barry, that's the key thing, right? You eliminate one type of trade when we nail the corner, right? If it's a low, we know, hey, only look at buy side trades.
Exactly. That's half the battle, right?
It is, right. You eliminate half of the possibilities right there.
And if you guys don't know, the reason we do this is from testing, past price action. What we know is, once a high or low comes in and we can confirm it through our tools, what happens is you have a free run in one direction for 90 days, 180 days, who knows? But you only have to kind of question it at those critical points, not every day. Like, oh, is it? Is it the end today? End today? End today?
That's right.
Oh my God, the indicator came down, or oh my God,
Then we focus on the trade setups, right? Where do we get good risk reward setups? Not what direction are we trading in?
Yeah, we know the direction. After you have that, we know it for not just for a couple of days. We know it till time runs out. So in between, if it's going sideways, we're not going to get in a panic thinking, oh my God, it's not going higher. No, time's not up yet. That's what Gan was talking about.
Right.
Until time, like the S&P, until time is up. Up until today, it was just fine. There was no big scare. Like, we weren't talking to sell it or looking for sell-offs or crashes or anything, right?
No.
But now, coming into the 180, okay, yellow flag we're in those critical windows. Okay.
Now it becomes a two-way street until we get that turn nailed.
That's right. Exactly.
So
I think that sums it up nicely.
Excellent. No, very, very great show. I hope everybody enjoyed it. Listen, people, have a great week. Rest up, because we're coming into important cycle time, so it should be active, and we need to be perceptive as to what the effects are. So have a great week. Barry, have a terrific week. Great show, and we'll talk soon.
Thanks, Ben. Good job. Good commodities. And if you guys like our work, please share, hit the like, subscribe, and what else, Ben? Help the channel grow.
Exactly. We'll talk to everybody soon.
Yep. Thanks.
Take care.
Bye.